Abby. Good afternoon, financial professionals. Abby Fletcher here of E4 Insurance Services, welcoming you to the Brew, building relationships every week. Thanks for tuning in today. For those of you joining the Brewcast for the first time, we like to start by celebrating today's National Day for December 2nd. First up, today is National Special Education Day. On this day in 1975, President Gerald Ford signed the Individuals with Disabilities Education Act, known as IDEA. The law stipulated that children with disabilities had the right to the same free educations that other children had access to. Fast forward to today, and IDEA has been instrumental in increasing graduation rates for students with disabilities. Today, we honor the progress we've made in special education. Also, today is National Mutt Day, encouraging all of us to embrace, save, and celebrate mixed breed dogs. Despite the name, a mutt learns, obeys, and trains just like a purebred animal. While their lineage cannot be traced, their companionship is faithful. Today, reach out to your local animal shelter to volunteer or perhaps bring home a furry friend. Today on The Brew, we have our partner, Craig Geiger, who serves as Regional Director of AIG Annuity Solutions. Today, he'll be sharing concepts, helping advisors uncover sales opportunities within their existing client base, especially in today's challenging environment. Feel free to use the chat box below while Craig is live. I'll be keeping an eye out for your questions, and so we can provide real-time answers. Also, all attendees are in a drawing for a prize, and we'll be announcing the winner shortly, so stay tuned. Thanks for tuning in today, and without further ado, Craig, welcome. The mic is yours.
All right, thanks, Abby. Appreciate it. And again, thanks for E4 for giving us an opportunity at Lincoln to really give us an opportunity to share some ideas with you. It's certainly been a challenging year, as everyone knows. COVID has really had an impact, I know, on a lot of advisors' practices this year. It's very hard to prospect and find new clients in this environment because of all the things that are going on and really all the variables that we're all dealing with today. So really this presentation is really geared toward helping you mind your book of business, uncovering new opportunities. And really, there was a recent study that was done in our industry, and it found that over 60% of all the business that's been written across the board, whether that's life insurance, annuities, long-term care across the board, 60% of it come from existing clients. So the reality is, as advisors, going back to those existing files, figuring out other ways where you can help clients and help them in different areas is certainly essential as we transition, hopefully back to normal once the vaccine comes out with COVID-19. But today's presentation is really geared toward 3 ideas that really can help impact your business in a big way. We've certainly seen a big pickup in these 3 ideas at Lincoln. It's really been around, 1, the beneficiary planning opportunity. As you can imagine, beneficiary planning is essential to your business because we all know that with life, things change all the time. And it's very important to keep these beneficiaries current. And a lot of times we find that a lot of things get outdated, don't get updated, and it can create a real problem later. But it also creates an opportunity for you to get back in front of those clients, either in person or virtually, of course. Number 2 is it's going to be the RMD review. Obviously, a lot of people are concerned about taxes. Obviously, with the new administration coming in, the biggest thing they talked about was raising taxes. So we know that's going to be an issue for people that are looking for ways to limit their tax liabilities in certain areas. So we're going to talk about an RMD review and an idea to kind of minimize, if you will, your RMDs and maybe able to punt some of those RMDs to a later point. And then 3, we're going to talk about the Roth IRA planning opportunity. I mean, the Roth IRA has been around for a long time. But if you think about it, there's never really been a better time probably to do it now, because let Uncle Sam partake in your loss, not participate in your gain, with the opportunity to do it at tax rates while they're at historic lows. So if we think about keeping it in the family, it's all about giving you the tools and strategies to be able to go back in front of your existing clients and give them the different things you can share with them to really impact those conversations. So obviously, when it comes to beneficiary planning, 1, we want to make sure the money goes where it's intended to go. 2, that your will doesn't always control, where your death benefit's going to go. That's certainly important to know. then you may have forgotten to subtract or add a beneficiary. Believe it or not, one of the biggest things that we see that happen out there in the insurance industry is beneficiaries don't get updated. And as an example, someone gets divorced and gets remarried, but they never take the original spouse off their contract, so the death benefit gets paid to the other spouse. A lot of times we see that's a big, big thing that comes up a lot. Number 4 is obviously realizing that life changes, necessities, things in life happen, so it's always important to update the beneficiaries. And of course, make sure that beneficiary is not hit with a larger tax burden than they need to be. And we're going to talk more about that. Now, one of the biggest areas where Lincoln's really had a huge impact in the industry right now is really with what happened with the Secure Act. The Secure Act really changed the qualified market arena in a big, big way because the lifetime stretch went away. The biggest thing we know is that now you have to do the out in 10 rule, especially going in 2020 and forward. So one of the biggest things that Lincoln does, and it has a really kind of niche, if you will, in terms of an opportunity, is that you can bring over a non-Benny IRA, and that beneficiary can do a full 10-year stretch at Lincoln on our index annuities today. So a lot of times carriers out there that we find a lot of them are not doing that or are not set up to do that kind of business. So if you do come across clients that do have, if you come across a client that's a Benny that's inheriting an IRA, wants to take advantage of that full 10-year out stretch, Lincoln can obviously help you there. We're doing a lot of that kind of business. Now, obviously, there are some scenarios or exceptions where they don't have that out in 10 rule, and that's going to be your eligible designated beneficiaries, of course, that are listed on the slide. And of course, on the qualified plan side, again, this is something we're definitely seeing a lot of traction in, because for a lot of people that don't want to pay all their taxes now, and because that lifetime stretch is gone, taking advantage of that full 10-year stretch obviously is a great benefit to the beneficiary to be able to continue to build up those assets and to be able to stretch out that tax burden over a 10-year period of time. So the other thing we're going to talk about here is some of the pieces that everyone's going to be getting today for joining today's call. And it's going to be all on the beneficiary planning opportunities, a little bit more on the Secure Act to give you all the main bullet points of stuff you need to know, and of course the 1035 exchange opportunity as well. So when we talk about RMD reviews, obviously when we think about the RMD, that's always been kind of a pain to a lot of people because they don't want to have to take their RMDs. Now, as we know with Secure, that 70.5 rule is now into 72. And for a lot of people out there that still really would like to minimize their tax burden a little bit if they can, might want to take a look at this idea. And that's really around utilizing a qualified longevity annuity contract, or a QLAC, as a way to push a portion of those assets into that contract, let it build up in terms of longevity credits to create a future income, and then of course minimize your RMDs. And so obviously with the QLAC, it's going to give the opportunity to wait till 85 to start those distributions on those assets, and they can actually change it and start it up to 5 years earlier if something changes along the way. But more importantly, if that client winds up passing and they never take any benefit, the beneficiary can then receive the original premium that was not paid out. So as an example, let's set up a case study here. We've got Andre, 7 years old. He's got about $270,000 or so in his IRA. If he did nothing, now he's obviously going to take an RMD off that at 72. But what he could do is he could take 25% of that and put it into a QLAC. And by doing that, that's going to put that portion of the money and defer it and let that be an income drive or source for later when it comes to retirement, almost using that as a longevity hedge for future income. And then leaving that the remaining money in that IRA. And by doing so, it's obviously going to limit the amount of RMDs they're taking because they're taking RMDs on a smaller amount of money. By doing so, it's going to reduce Andre's RMDs by over $70,000. It's going to save him over $17,000 in taxes. And more importantly, if he doesn't use that beneficiary would then receive that $135,000 of premium he never used in that contract. So to kind of set it up, if you will, in terms of an idea, think about a client that's got $540,000 in an IRA. If they go to the standard rule of thumb of a 4% withdrawal, that's going to create $21,600 of income a year. What they could do, though, instead of doing that, is they could put $135,000 into that QLAC, let it at age 70, let it defer all the way to age 85. At that point, at age 85, that's going to produce $21,522 of income, and the remaining IRA, which is the $405,000, you can then just take that over a 15-year period and give them more income than they would have had the other way around, almost pretty much a 25% increase. So really what you're doing is you're giving that client more income now, while also giving them income on the back end to protect them from longevity if they go past life expectancy. So it's certainly a really good idea, something we're definitely seeing a lot of traffic at Lincoln. In terms of Roth IRA planning, again, this is something that we're definitely seeing a huge uptick this year, is because I think a lot of people realize that, we know tax rates kind of go in flows. They always go in waves. They go up for a long time and they come back down, then they go up again, they come back down. If you look at the history of tax rates, it seems like that's always seems to be the way it goes. So right now, there might be a great opportunity to get back in front of clients and say, listen, now might be the time to consider doing a Roth conversion, because again, tax rates are still relatively low, but they could be rising with the new administration. So we might want to take advantage of doing that today. So Lincoln's very well positioned to help you with Roth IRA conversions, and obviously it's a great opportunity for you to get back in front of clients with that idea. And obviously, another area to look at too is think about clients that you have that maybe you tried to get life insurance, and for whatever reason, that policy either got rated and they didn't want to take it, or they got declined and they don't have life insurance. What other ways can they create a legacy and leave money behind to the beneficiaries? That IRA might be the way to go if they have a sizable IRA, because now then it will pass tax-free to the beneficiaries later if they never utilize that asset. Obviously, by doing so, it doesn't include any kind of underwriting, but it also is going to create more leverage the longer that IRA grows. So certainly another great opportunity for you right now to get back in front of clients with a lot of these ideas. So to kind of wrap things up again, talking about beneficiary planning, we have all the different pieces that you can utilize with clients and have those conversations. 2, the RMD review, looking at a way to take a portion of those assets, put it into a QLAC, use it as your longevity hedge for income later in retirement, but at the same time creating income with the other portion of that IRA. And then 3, really that Roth conversion and really that declined life insurance case opportunity where, again, you can go back and say, hey, we couldn't get the life insurance, but maybe we can leverage and take advantage of this IRA, convert it into a Roth today, and then be able to create more tax efficiency for the beneficiaries later. So with that, I'm going to throw it back to Abby and see if there's any questions.
Thanks, Craig. Great share. I've opened up the line for questions from the audience, but while we wait for these questions to pop up, we do record brews, and the documents that Craig provided will be attached to the recording of his brew today. So if you're looking for the materials, we have them stored for you. Any questions from the audience? Oh, this just in. Is the max for QLAC 135K, Craig?
Correct. Yes.
Another one. Do the annuities offer long-term care access?
We do not. We do have different benefits inside our contracts, but it's not a pure nursing home benefit. No, it's not, or long-term care, I should say.
Got it. Do you have a source for life on an 81-year-old male?
I'd have to get back to you on that one.
We'll get you connected with the audience member asking. Good ones, good ones. Any others from the audience? Hearing and seeing none, Craig, we're going to move on to our drawing. I'm going to have you look into your virtual top hat and give us a number between 1 and 24.
23.
Who's the winner? Who's the winner? Oh, Dan Flees, congratulations, sir. You're the winner of this week's coffee card. Be on the lookout for an email coming your way from all of us here at E4 Insurance Services. We appreciate you logging in. And stay tuned for next Wednesday's brew. We'll have Tarika Novak of AIG Annuities sharing concepts to help your clients maximize their retirement income. Thanks, friends. Happy December and have a great day.